Today's interview featured Russ of DapperDividends.com. Anyway, it was a very insightful interview, and he talked about his top positions and everything. But before I get into this, I must state that none of this is financial advice or a recommendation, and it is for entertainment purposes only. And while you're here, hit the like and subscribe button. Without further ado, let's get into it. Hello, everybody. Today we have a very special guest on the Investor Spotlight, Russ. Welcome to the channel.
Oh, man, I love being a very special guest. Thank you so much for having me. It's a pleasure.
Yeah, I had Russ on the channel before, and it was a great interview and everything. And so I decided to get him back for the Investor Spotlight for the Coffee and Dividends series. So anyway, Russ, can you give everybody a brief background on yourself?
Yeah, well, I hope it doesn't matter. I got tea and dividends. I'm not a coffee drinker, so hopefully you're going to you don't kick me off. You allow somebody to sneak in there with some tea.
Yep. So what is so tell everybody about yourself a little bit.
Yeah. Well, a lot of people know or don't. I'm from Chicago, spent some time in the Navy while, my younger years, came back. I'm a welder full time. Work on commercial and industrial loading dock equipment, installing that, servicing it. It's been kind of nice, kind of fell backwards into it. But yeah, got bit with the investing bug somewhere around 2018. Really no financial literacy background. Education today, I assume it's like when we were young. I mean, woefully not performing up to prepare people for what they need for life, like the real things. I don't know. I'm going to be 40. Well, I just turned 48, but we learned how to write checks, and that's all I remember really about finances. Not a whole lot. So, I just didn't have a lot of financial literacy. Didn't really save a lot, and dude, like my grandparents would tell me to save 10%. It didn't even tell me what that meant, where to put it under the mattress. How do you go about that? Nothing. So. At least that stuck with me. And, somewhere around 2018, for some reason, I just got bit with the investing bug. And I thought, you know what? I'm going to learn this investing thing. And I'm sure that within, 3-4 years, I'll have it down cold. I can quit my job and I can just be a full-time trader or investor. I didn't even know what that meant. But anyway, the short story of that is I started with penny stocks like a lot of people do, then graduated to swing trading, which was a little bit better. I took some online courses with Udemy and like watching YouTubers. And it was while I was swing trading that I found out two things. One was that I have no capacity to follow rules. I'm very emotional. You're supposed to be like a robot. You set clear entries and exits based on chart pattern setups. And when these certain things triggered, like that's it, you're out, you're done. But I couldn't do it. If I was down, I would stay in. If I was up, I didn't want to sell. So I found out I'm very, very bad at trading because I'm too emotional. Can't follow the rules. But secondly, I was swing trading a stock, Merck, ticker MRK, pharmaceutical company. And during the swing trade, I got paid a dividend, and I really didn't know what that was. I saw money come into my account, and I was like, wait a minute, what? I just got money for doing nothing. So that kind of, like the Alice falling down the rabbit hole, I kind of went down the dividend rabbit hole and, haven't really come back up. I've spent some time evolving while I was down there. And now I've, used to chase high yield dividend stocks, things like AT&T or Verizon. Didn't really think much about dividend growth or what the offset was for receiving those higher dividends. But and then I just kind of to where I am now transitioned into more of yield agnostic or kind of focusing on total return. So I still love the passive income, a little bit of an addict there, but yeah, I've evolved how I think about that to want more of a dividend growth model and stocks that are, maybe not paying as much right now, but they grow their dividend really quickly because they're keeping a lot of money to reinvest back into the business. And then they can grow that dividend faster. So I guess that's the, short answer to all that.
So what type of investor would you consider yourself?
Probably yield agnostic dividend growth investor. I don't know if that makes any sense. I may be the only one out there that self-identifies as that, but that's where I'm at right now.
Yeah, usually it's like a income, um, or a growth or a hybrid. So sounds like more of like a hybrid style,
Oh, yeah, a hybrid of a hybrid, I'm sure, like a subculture of a subculture. But
right?
yeah, I mean, I still have some higher yielding things like Ares Capital, ticker ARCC. Not a huge percentage of the portfolio, but just something that I like that income coming in. But also, like I said, I look at the total return. So that's the stock price appreciation plus any dividends received. And a lot of times buybacks can help, when a company buys back its own stock, can help inflate the share price because, right, there's less shares to spread the earnings over. So with buybacks, like Warren Buffett taught me, he experienced that with American Express, where your ownership in the business increases without you doing a damn thing when the company buys back their shares. So yeah, that's but yeah, I have some REITs like Vici Properties, Agree Realty are two REITs that I own. So those are in the 4 to 6% range. Main Street Capital is a little higher, and then we go down from there. There's some that are less than 1% that I own, such as Kinsale Capital, ticker KNSL. And it's an insurance company, excess and surplus lines. They do weird stuff. So, yeah, if an insurer doesn't want to insure like a fireworks factory or a fireworks store or an MMA, mixed martial arts gym, that's where Kinsale comes in. Haunted houses, they do all kinds of interesting stuff like that.
So what are your top 3 or 4 ETFs or stocks right now that you're into?
So I have investments all over the place. My top one would be mutual fund S&P 500 version with my 401k through my employer, and then we go down from there to SCHD is a big one. Um, yeah, I mean, just so the short of it would probably the big ETFs would be S&P 500 slash VTI. We have I say slash because if you don't know and you're watching, S&P 500 is about the 500 largest stocks in the United States stock market, and then VTI is almost the entire publicly traded United States stock market, save for a few micro cap penny stocks, things like that that they don't include, but it's essentially the whole U.S. stock market. So there's a lot of overlap at the top in those, but those are my two big ones, and then is a third one. I also have the MLPX, the Global X MLP and Energy Infrastructure ETF. They do all the midstream things that issue a K1, things like Energy Products Partners, Energy Transfer, a lot of popular. They're the toll roads for oil and gas and natural gas. It doesn't really matter to them what the price of a barrel of oil is because they have contracts with the companies like Chevron and Exxon and Shell and ConocoPhillips to move their oil and natural gas. They transport it. That's all they do. That's all that they do. So MLPX, you can look it up. It's a basket of companies like that. So those are probably the big ones.
You have any individual stocks that are your top list that you
Yeah, of course. Agree Realty is one of my top ones, ticker ADC. I shifted out of Realty Income, which is a popular one, because they remind me of the Blob. They're just this massive real estate behemoth, and they're just trying to suck up all kinds of things to help them move the needle, because when you get real big, it can be harder to move the needle. So they've been expanding into Europe and gaming and doing a lot of other things outside of retail, which they were a triple net lease REIT, which triple net lease is that the tenant pays for maintenance and insurance and upgrades of the property, repairs, things like that. So it's a pretty nice setup. But I shifted into Agree Realty, which is a smaller version, I would say, of Realty Income, and they focus strictly on retail, things like your Costco, AutoZone, stores like that. I interviewed their CEO, Joey Agree. Love the guy. He calls them fungible rectangles. So those are just, it's a box, a fungible rectangle or square that you can think of a car wash. If a car wash goes out of business, well, you kind of have to find another car wash to put in there and knock the building down. It's not fungible. It's it has to be a car wash. It's a 80-foot tunnel or whatever. But yeah, so if a Dollar General moves out, You could put a Dollar Tree in there, or you could put, so yeah. So Agree Realty is a big one. And then again, I've started a position in Kinsale Capital. That's the one I've been buying a lot of lately. And I say a lot of, I guess for my smaller portfolio. But yeah, there's a few out there. So I should have brought my list up to be exact, which I could here, if you want to cover me and say something.
So, yeah, yeah, I list a couple more, and then I got another question that's probably going to be interesting to everybody right now. So you said Agree Realty, and then you said Main Street Capital earlier.
Right, right. And I have the other two for you. So Ares Capital is my number 2 individual position, and then Visa is my number 3rd, ticker V, which is love that stock, and it had been going down for a bit. So I picked up a few more shares, but those are my 2 or 3 biggest ones to answer your question.
So, yeah, that's an interesting list. So, what do you think, or do you even have an opinion on this new IPO that's coming out that's really exciting, the SpaceX IPO coming out this week?
I'll be watching from the sidelines with my popcorn. I ain't touching that thing. They can have it. I don't like touching IPOs. I don't have the number in front of me, but there's a significant number of IPOs, which are initial public offerings, that underperform from where they started trading at. And it's too new. My rule of thumb is I wouldn't even consider an IPO until we have at least 1 year of data. And specifically because a lot of early investors, people get into SpaceX, which is what you're talking about. And SpaceX started in the early 2000s. So there's people that are in at probably pennies a share. You could have somebody that's in for 12 cents a share. And all this time, they have not been able to liquidate or realize any gains from that unless they were able to sell their shares to somebody else privately. And so they view these as liquidation events a lot of times, these IPOs, because these early investors want to get paid, right? They want to get money. So what happens is 6 months after, it's called a lockup period, the IPO is when they can cash out, those people that are into SpaceX for 12 cents a share. So 6 months after an IPO, it doesn't always happen, but you could see a lot of selling pressure on the stock because a lot of people want to cash out. So yeah, I've kind of followed it a little bit. It's interesting. It's going to be fun to watch, but I'm not going to touch it at all.
Yeah, I was curious since that's some exciting news lately. And did you take advantage of the big sell-off Friday to add anything else?
Well, no, tech sold off, but most of my stuff didn't. I actually bought a few more shares of SCHY, which is the Schwab's International Dividend Equity ETF. It's the sister version of SCHD, which is, everybody likes that. But yeah, I really added a few more shares of that, and I think it's healthy. The market needed it. It's been absolutely insane to watch tech just going up and up and up and up. But we'll see, man. My worry is, and I'm writing about this in my newsletter, is that AI is going to be commoditized, meaning the AI inference. So there's AI models that get trained, and then there's AI models that are for inference. And the inference is like what we use when you go to ChatGPT and you ask it a question and it spits out an answer. That's inference. And to me, that could be a very much like a commodity, as we saw with the Chinese model DeepSeek. They reduced their premium model by 75%, which tells me it's already starting. It's already going to be a race to the bottom. And I don't know. We just booked airline flight to Florida. I look for the cheapest flight. That's what I look for. I don't care. I mean, my wife's a little different. She'd like to go first class. I would sit in a lawn chair on the plane. I don't care, lawn chair with a rope tied to it. I'm fine. But uh, that's me. So, but that's what AI could be. I pay for Claude Premium, which is about $20 a month. But if Gemini all of a sudden says, yeah, we do the exact same thing, but for half the price, well, I'm probably going to go there. It's not like I don't have a Claude tattoo yet, like some people get Harley Davidson tattoos. They love that brand. So I'm a little worried that could affect some of the hyperscalers, companies like Anthropic, which owns Claude, OpenAI, which owns ChatGPT, and Gemini, Alphabet. But, So we'll see. Will that happen? I have no idea. Nobody knows what AI is going to do, but we do know that it's here and it is changing the world. So it's a fun time to be alive and to see how this shakes out.
Yeah, definitely. The AI is definitely, seems like it's taken over a lot lately anyway. So, Russ, a lot of good stuff there. Where can people find out more about you?
You go to dapperdividends.com. I have all my links there, or YouTube, Dapper Dividends, and find me. That's pretty easy. It's not too hard.
And you said you had a live show every week.
Almost every Sunday, unless there's some reason I can't do it. I'll be in Florida in a few weeks, so I might try to do one, but it can be a little bit difficult. But yeah, every Sunday night for an hour, talk investing. We have some laughs, and sometimes it goes off the rails. Like last weekend, people were bringing up Rick, ticker RICK, which is RCI Hospitality Holdings. Do you know about RCI Hospitality Holdings?
No, I don't.
Yeah, they own strip clubs, a whole mess of strip clubs. Rick's Cabaret, I think, was the big one. And then, so I always make the joke that if you want to be a sleazy strip club owner, then just buy ticker RICK for like $25. So you can run around telling everybody you're a strip club owner. that's the world of investing. Almost anything you want something that's boring and safe and overvalued like Costco, you got it. Or you want to be a sleazy strip club owner, ticker RICK, and you can have it.
All right. Well, that sounds pretty interesting. So, I'll share the links to in the description of this with everybody to your social media and everything. And I'd like to thank you again for coming on to the channel.
No problem, Mike. Thank you, man.
Everybody, take care.